Yo, what is going on, guys? Lottery Stocks here. Welcome back to the channel. Welcome to the channel. If you're new, I've had a migraine for the past 2 days and I still kind of have a little bit of a headache and I'm getting chills. I don't know what I'm coming down with, but hopefully I'll be good. Sorry I couldn't post a video yesterday. Today's video should be interesting, to say the least. I did some charting yesterday on AMC because somebody requested in the Discord, what is the next realistic price target for AMC if we had another run? Again, both of the runs before, back in January and then back in June, were gamma run-ups and FOMO, and ultimately shorts never really covered or got out of their positions. So without further ado, let's get into the video. All I ask in return is for you to hit that like button, hit that subscribe button, and drop a comment down below. Let's go. Facebook just got fined with a $277 million fine following a $500 million user data leak, and Apple is set to lose $6.9 billion due to protest at China's factory. Apple is having problems in China, and Apple's also having issues with Elon Musk and Twitter. Overall, it's probably not the safest blue chip to hold as of right now, but I do think Apple will rebound. It's Apple. And then the news everybody's talking about, another crypto platform crumbled due to FTX. BlockFi officially filed for bankruptcy. BlockFi says that their liabilities are between 1 billion and 10 billion range, which is a huge range to just throw out there. The fact that they said that, it's probably closer to 10 billion, and they also only have 256 million cash on hand. So how BlockFi is going to get out of this, I am not really sure, but FTX does owe BlockFi over 200 million. If I'm wrong, quote me in the comments, but I do believe FTX does owe BlockFi money. But either way, that is still not even close to enough to pay off these liabilities. BlockFi recently halted withdrawals. Following that, now they are filing for bankruptcy. The Bank of Japan reported an unrealized loss on its Japanese government bond holdings for the first time in more than 16 years. Now, fact or not, this tweet says that crypto exchange AAX has suspended withdrawals for 15 days. Today, they deleted their YouTube channel with all the videos, and then they also took down their Facebook group. Whether this is true or not, following the FTX collapse, a ton of exchanges are going bankrupt, and ultimately just, it's kind of scary to figure out where to hold crypto on, if you even want to hold crypto in general. Me personally, I'm not holding any crypto right now, and the space is getting pretty sketchy, to say the least. Any currency is kind of sketchy right now. There's crisis going on everywhere and bankruptcies going on everywhere. RBI, UAE, central bank discuss mechanism to trade in local currencies. And then speaking of that short squeeze play, COSM, Cosmos Holdings, which is up over 30% today, or at least was up over 30%. Let me know in the comments if you guys traded that. We called it out about a week ago on the channel in a short squeeze plays video. We also called out BBIG and Mullen, which I do think are going to have their run pretty soon. But this article states that almost the entire public float is sold short on COSM, which means that it could probably have more room to run. But again, I wouldn't quote these facts as it's not a strong data source to pay attention to. But let me know if you guys are in COSM. Breaking news, Volkswagen is warning the energy crisis is grinding European industry to halt as the US and China race ahead. And speaking of that, the head of the European Central Bank says Europe's inflation likely hasn't peaked, energy crisis, and now a potential trade war. Watch closely. Now, speaking of everything sketchy going on with crypto, Fidelity has officially opened retail Bitcoin and crypto trading accounts. This is sketchy. I wouldn't touch this at all. I can't give you guys personal financial advice, and I can't talk against the company. I mean, maybe I can, but I'm just saying I would not touch this. This is just sketchy as fuck, to say the least. JP Morgan and Dutch Bank are being sued by Epstein accusers in New York. We went over this in an older video, but now it's actually being followed through with. Finally, here's some Ortex numbers on AMC and APE. So the short interest is currently at 20.07%, cost to borrow at 34.69%, and utilization at 100%. And then we have the average cost to borrow at 55 and the max at 70%. As for APE, this is interesting. Utilization is almost at 95% on APE. When this reaches 100, it's going to be interesting to see if they actually knock this down and utilization doesn't matter like they've been doing to AMC, or if shorts are really in trouble on APE. So that's getting close to 100%. This is going to be interesting, to say the least, especially how low APE is, trading around $1 or so. Cost to borrow, 8%, really nothing going on there. And the short interest of free float, apparently only 8.9%, which I personally don't believe. And now we have one of the world's largest hedge funds fighting for survival, which is Tiger Global. We had issues with Tiger Global in the past, back during the January run up with AMC and GameStop. They are currently losing 185 million a day. So if you guys lost a couple bad trades, I wouldn't feel bad for yourself. I would feel bad for, well, actually, I wouldn't feel bad for anybody, but this ultimately just sucks. And yes, this article did come out today, so this is not old news. They are currently getting fucked, and I'm sure they are not the only hedge fund to do so. Something real cool to look at is GameStop's free float is almost at 60% DRS. I'm interested to see if DRS will actually do anything, because the fee, the cost to borrow fee, is still way lower than AMC's at 7.6%, which is just scary. And I talked about how I don't want to see the cost to borrow start dropping on AMC, because this is going to indicate that the shorts found another way for the broker to quote-unquote locate shares for them to further suppress the price down, and cost to borrow so far has been dropping, which is not looking too good. Now I want to touch on the charts real quick, and this is going to be very, very complicated. Just try to stick with me. I don't even know if I should put it in this video. It's probably going to be a little hard to explain, and probably should be its own video on its own. But what we have right now is the fib retracement lined up on each of the run-ups from the low to the high. And here's something that you can pay attention to. The first run-up from the low to the high, at least from where we marked it, was up about 934%, give or take. And then the orange on the fib retracement, you can see that it touched it 2 times, got rejected, and finally had its move up. And then the same thing in the orange up here on the second run up, you had that touch on the orange, and you didn't get it the second time, but this is where things switched up. And essentially this is the level that you're looking at, which this inverse would have touched the orange again. What's interesting is the bars pattern from where we switched to the downside, copied and flipped, is actually how the OBV indicator looks, and it looks more accurate, which would bring us to the natural price of around $31, which is what you can see on the OBV indicator. I'll show you that real quick just so you guys know that I'm not lying. You can see right here, this is kind of the level it's trading at on the OBV indicator, and back here on September 13th or so, you see this all the way up to $32 on the on balance volume, which kind of tells me that that is the natural price on AMC. Now, where would AMC go based off of the fib retracement? This is kind of really sketchy, and I found some things out that are probably going, you know, some people are going to say, well, that's a shot in the dark, but I find this pretty interesting. So between the times, the first run up to the second run up, when it hit the orange in the fib retracement, you had about a 2-month span, so a 62-day span. Now the second time, from when we switched to the downside, you had about a 3-month span, a 90-day span. So you went from 60 days to 90 days. In between the time we touched orange and then the time we touched it again upon the quote-unquote second move, right, you had a 115-day span. Now stick with me on this. Based off of that, the same thing, you had that touch where you would have had it on the orange until the next move. You had about that 115-day span again, which is weird. We're just reading the algorithms in the room. And then from the move to the move again, which essentially would have touched the orange in the fib retracement and would bring us to a new level, which we're going to talk about in a second, you have about a 4-month span, so around 120 to 130 days. So you can see these cycles are being extended each time we actually have a move and actually have a run up. Now, just to say this, right, if we ran the same amount we ran the last 2 times, it would bring us up to about $55, which before the split, that would be close to $100 before getting smacked, which I think a lot of people who haven't been in this play too long will probably sell at, but that's something I wanted to bring up. Guys, the longer everybody holds together, the higher the price will go. It's just something that we have to reiterate now and time again, because people do start to lose faith. Personally, I'm diamond handing, and that is not even close to the price that I'm looking at. But just based off of TA, if we actually have the move that we should have had back here, and the on-balance volume indicator stating that the real price is still at $30. If you had that 900% gain again, you're looking close to around $186, because that is where you would see that same type of gain if we had that again. And again, that is measuring from the low back here, because we measure from the low to the highs on each run and where we should have had the run. So again, back here, December of 2021 is when things took a turn for the worst, and kind of hedge funds started doing some really fucked up shit with market makers and essentially just manipulating the stock price and the algorithm. Again, those aren't my price targets. I'm just telling you realistically, from a technical analysis standpoint, if we had the same type of run up, that is what you would see. However, if shorts covered, that's a different story, because the other 2 run up shorts did not cover. Now, taking a look at the S&P 500 real quick, we are fighting this trend line once again, and if we break below here, I think the S&P 500 is going to have a lot of room to fall even further. So just keep an eye on that. We are currently trading at 396 right now, and it is hugging this trend line. So we will see essentially what happens, but crypto platforms are going under. banks are going under, banks are starting to trade gold instead of currencies, and essentially this is what I got for you for today's video, guys. Hopefully I can get better so I can put out more videos. Please subscribe, it's free and it takes absolutely no time to do so. Also helps the channel out tremendously. Make sure to hit that like on your way out. If you're still here for the video, make sure to get up to 15 free stocks and a chance to win $60,000 plus a $10 cashback coupon for literally just hitting the link pinned in the top of comments, signing up for Moomoo, opening an account, and depositing at least $1. So it's literally the same exact way you would sign up for Webull and put $1 in, except you're going to reap these huge benefits. And this is a limited time. It's a holiday event. Again, that will be linked in the description and pinned in the top comments down below. I love you all. Lottery Stocks out.